Hi guys, welcome back to the channel. My name is Dave, and wow, what a week. You gotta love this stuff. What an amazing market, right? Very emotional. Take you high, take you low, decide where to leave you at the end of the night. So for me, I know between Friday and Saturday night, I had all kinds of stock that was getting put to me, right? All those puts that I love to sell, they were all getting assigned. So I have a ton of stock now, and I gotta decide what to do with all this. Am I gonna turn around and try to sell the calls? Can I make much off of these? Should I add to them? What should I do? So I want to kind of share that with you today. But this can have a deep psychological impact to us too. So we're going to talk through that because I think, for me, I'm looking at Monday going, oh, look, I just lost a BMW. Oh, Tuesday, look, I lost a Tesla. Wednesday wasn't so bad. I just lost a Prius. So I could take that kind of viewpoint, and maybe for you, maybe it's for somebody else, they don't have a big account and it's just an iPhone on Monday and a tablet on Tuesday. I don't know, whatever the situation is. But that's the negative way to look at this. The positive way would be, oh my gosh, all these stocks that I love so much that I think offer great value going forward, have a bright future, are now on sale, right? It was at 100, now it's at 85, and I can buy some more shares. Oh, and it pays a big dividend, and it pays me more now. So I want to kind of talk through that and I guess where I see this market headed for 2022 and what I'm going to do and how I'm going to handle all these things going on in my crazy portfolio. So if that is what you're looking for, please stick around. Whoop. Go Bengals, the Fighting Joe Burrows. We're off to a solid start here. 2 wins in the playoffs. We'll see where we go. I don't like that San Francisco is still out there, but we'll see what all happens there. So, overreaction to the market, that's the norm, right? After one day, one down day, CNN grabs the headlines. Oh my gosh, everything's in red, the end of the world. Imagine 5 days in a row, several days in a row, right? Oh my gosh, then we're really in trouble. They're going to let us know about it every single day, every moment. We're not going to get off that. And there's a psychological impact if you're watching a lot of the news. And, people are looking at these stocks that they put $100 into and now they're worth $30 a share, right? Because they don't make any money and they're trying to figure out what to do. Can I buy my way out? And that's definitely not the way you want to go. You don't want to chase bad money. So you don't put $30 more into that stock, right? You don't want to just average down. You want to get out. You want to get into some solid products. Now, if it's something that you bought a good stock and it was at 100 and it's down to 30 and you still have a strong belief in it, then just let it ride. You don't have to double down. You don't have to add to the position at a bad point, right? Because you bought $100 worth and that's 5 shares maybe. And now it's worth 20 and it's still 5 shares. You don't have to add to this bad position. So I had that with Alibaba last year and I sold out of the majority of it, but I kept some shares because I have a belief in the company, but there's just too much risk out there for me for Alibaba. So I'm just going to hang on to those shares and see where they take me in the long run, but I'm not going to expose myself anymore to Alibaba. So as we're looking at this and everybody's talking about the end of days after 1 week, one bad week, we don't have to react to that. We can just kind of hold our position, sit tight. It works fine. So our real goal here is to buy stocks that are undervalued. And I think right now, broadly based ETFs like VOO and VTI are still a little bit overvalued, simply because there's still a lot of junk in there that are included that I think are still getting repriced. They're going to continue to fall. And that's going to punish things like VTI and VOO. So the only shares that I'll be buying in these broad-based ETFs will probably be through things like M1 Finance because it's automated and I put a little bit of money in there every so often. But I think in general, my ETF holdings, we're just going to sit on them and I'll continue to average in over time as the market corrects. But with, individual stocks, I think there's a lot that's been punished unjustly, let's say. And I think we're in that old cliche of the stock picker's market right now. So I think you can find some great value in some good stocks. And that's what I'm going to be focused on going forward. All right, so this doesn't mean I'm selling out of these broad-based ETFs. I'm just not going to be adding to them aggressively at this point. Now, if I do buy into an ETF, it's probably going to be more like a sector ETF. Like I said, I like XLF and I like XLE and I like some of these other ones that are sector based. If you look at XLF, I did a video on it about a week ago and I said, oh, I think this is mine for 2022. And I still have that belief, but now look, you can buy it. It's dropped considerably from where it was at before, after earnings and everything else came out with JP Morgan and some of these other banks and stuff like that. So that would be one that I might continue to sell puts against, or I might buy and sell calls against, or I might just add it to my portfolio because I think now it's getting into that good value territory. A great example of this value play would be something like Procter & Gamble, which isn't of great value, I think, right now. I think it's maybe even a little bit overpriced. But if you look at that stock, it hasn't moved at all. It's still right at its 52-week high, whereas VTI, the total market index, right, has come off about 9% from its high. So why is that? Well, one, VTI has a bunch of junk in it, like I said, but Procter and Gamble, they sell toothpaste, right? They have pricing power. So when you go to the grocery store, you don't care when you throw it in your cart. Is it $4 or is it $4.80? Well, that's huge for Procter and Gamble, but for the consumer, you just take it. So we're in this inflationary environment. Interest rates are going up and everything else. And Procter and Gamble says, well, that's great. I'll charge a little bit more for toothpaste. They can handle it really well. It's very easy for Procter and Gamble to shrug it off and get moving along. With that said, you've seen people flock to Procter and Gamble. So they're selling off the junk. They're getting into Procter and Gamble. Pays a nice little dividend. They feel confident that it's going to be able to keep its value. But with it at a 27 multiple, I don't think it's a great value, as I said, which is about what the total market is trading at right now. I think around 27 multiple as well. So if you look at the S&P 500. So with those being equivalent, which would you rather have? I know for me, it's a simple answer. I'd rather have Procter and Gamble. But with that said, also, I probably will lighten the load up a little bit with Procter & Gamble because it's performed so well. I'll probably take some of those profits now, and I'll probably disperse them into some other areas where I think they can do a little bit better. But it's not going to be more than 10% because I like Procter & Gamble going forward as well. So I'm just going to take a little bit off. I do the same thing with Apple. When Apple explodes to the upside, I sell a little bit, but it's still a large part of my portfolio. Another example of finding value right now is in FANG stocks like Facebook or Meta. FB, right? I had 100 shares put to me this last weekend at about 315 or 310, and it's at like 305 right now. And I like that position because I can turn around and sell that call, or I can hold on to it. I've got lots of opportunities because I think Facebook trading at about a 22 multiple compared to 27 for Procter & Gamble in the overall market sounds like a value stock. Now, they generate the revenue through advertising primarily, right? I think 98% of their revenue. And people could be tightening their belts depending on how 2022 goes. So there could be some fear there that they could lose some of those advertising dollars. And I bet that they will. But they make so much money that I don't think it's going to be that big of an effect on the company overall. They're still going to be trading at a 22 multiple maybe in a year if those advertising budgets get restricted. But I'm confident in owning Facebook over something like VOO at the moment. So if I was going to put $100 into the stock market, I would pick Facebook over VOO. Now, if you're just staying the course of auto investing, you want to just put it into the general market, do so. But as a stock picker, I'm going to pick Facebook right now over an individual ETF that's a broad-based instrument. So here's the plan. On Monday, when the market opens, I'm going to panic sell everything. I won't own anything, and I'll have all this cash, and it'll work out really well for me. No. On second thought is I'm not going to do that. I'm just going to sell calls on all these different stocks that were put to me, and I'm going to generate some income that way. That sounds pretty good. If the stock market comes back, so be it. The stock market continues to drop. Great. I'll add some shares of the stocks that I like so much, like Facebook, for example. If it drops to $295, I'll pick up 10 shares. Drops to $290, I'll add some more, right? And I'm going to reduce my basis this way, and eventually I'll sell that call on Facebook and probably reduce my exposure to Facebook a little bit. But overall, I have faith in Facebook in the long run. Now, I might reposition my portfolio a little bit. I might sell some ETFs that I have in there right now in order to buy some individual stocks that I believe in more. But in general, I'm not going to do much of anything other than start selling calls and averaging into these positions that I like the best. And while I'll stress, do not panic sell. If you are in some of these tech stocks that traded these incredibly high multiples that are counting on a robust economy over the next 3 to 5 years in order to hit their growth targets, these are ones that in my portfolio, I have a couple of these, right? I took on the risk. It didn't pay off. I plan on selling these. Again, don't panic sell, but think through it and think if you want to have these in your portfolio. Because I'd rather have my money working in something that I have confidence over the next 12, 24, 36 months. So I plan on putting my money there. There was a period where the QQQ did not return any money for, I think, 12 to 15 years. I'll put a chart up now and I'll kind of take a look at that to verify. But, some of these high multiple tech stocks, it might take them a long time in order to hit those growth targets. So that's how I'm going to reposition my portfolio when it comes to those particular stocks. I certainly won't try to throw good money at bad in those types of stocks. I won't double down on my investment in order to try to buy my way out of the stock. I think that's a horrible plan. You need to actually always ask yourself, is this a good buy? Now, if you have belief in it, go for it, but make sure you do your research and you kind of understand what you're investing in over the long term because it could get rough. So after one really tough week in the stock market, what has really changed? For me, not much. I'm not going to change my behavior. I'm going to go on Monday. I'm going to start selling my calls. And for all those different stocks that got put to me, and that's in my options account. In my long-term holding account, I'll look for stocks that I think are on sale, that I think are undervalued unjustly right now, and I'll pick up a few shares here and there. Now, if you don't like to buy individual stocks, you just like VTI, just keep in mind it's 9% off of its high. So it is on sale a little bit, and it might become more on sale. So you can continue to buy every week, however you'd like to handle it. Not a bad way to go about it. It's proven that it's been successful in the past, so I think it'll continue to be successful in the future, right? So, with all that said, if you have any questions on any of this, please ask down below. Please like and subscribe if you like this type of content, and we'll see you the next time around, all right? And by the way, go Bengals. 2 more games. Let's go. Whoop!